What if investing just $100 in 2026 mattered more than investing $10,000 later, if you simply knew where to put it? Most people believe investing is only for the wealthy. They believe you need thousands of dollars, advanced knowledge, or insider access. That belief keeps people broke. In 2026, $100 is more powerful than it has ever been. You can own fractions of companies. You can automate investing. You can diversify instantly. But most beginners fail, not because they start small, but because they start wrong. In this video, you'll learn exactly how to invest $100 in 2026, using 3 beginner-friendly options that actually work. No hype, no gambling, no complicated strategies. Let's start with the real problem. The biggest mistake beginners make is not choosing the wrong investment. It's thinking short-term. People ask, can $100 really make a difference? The answer is no. Not today. Not next month. But over years, absolutely. Another mistake is chasing fast money. In 2026, social media will still be full of overnight millionaires, risky trades, hype stocks, and fake gurus. Beginners don't need speed. They need safety. They need simplicity. They need consistency. That's why every option in this video follows one rule. Survive first. Grow second. Keep it simple. Option 1 is total market index funds. A total market index fund lets you invest in hundreds or even thousands of companies at once. Instead of guessing which company will win, you own the entire market. When some companies fail, others replace them. That's why index funds work. Historically, broad markets have grown around 7 to 10% per year over long periods. That may not sound exciting, but compounding makes it powerful. Here's how to invest $100 step by step. First, choose a beginner-friendly investing app that allows fractional shares. Second, select one broad market index fund. Only one. Do not overthink it. Third, invest the full $100. Time in the market beats waiting. Fourth, set automatic contributions, even small ones. This investment won't double overnight, but it will grow quietly month after month, year after year. Index investing works only if you stay invested. This option is best for complete beginners, long-term thinkers, and anyone who wants a low-stress system. Option 2 is high-quality dividend investing. Dividend stocks pay you real cash simply for owning them, even if the stock price doesn't move. Think of it like rent, but instead of property, you own part of a business. Dividends do 3 powerful things. They reward patience. They reduce emotional selling. They compound automatically when reinvested. Each payment buys more shares. Those shares pay more dividends, which buy even more shares. That's compounding. Here's how to start. First, choose one reliable dividend stock or dividend ETF. Avoid extremely high yields. Second, turn on dividend reinvestment. This step is critical. Third, invest your $100. Fourth, add money consistently whenever possible. Your first dividend payment may be small, a few cents, maybe $1. That's normal. The goal isn't income today. The goal is income forever. This option is best for people who enjoy passive income, investors who need motivation, and long-term holders. Option 3 is investing in skills and education. This is often the highest return investment, especially early on. Instead of putting $100 into the market, you invest it into learning a valuable skill. If you increase your income by even $200 per month, that return beats most traditional investments. You can't invest much if you don't earn much. Skills increase earning power. Earning power fuels investing. High-value skills in 2026 include content creation, video editing, copywriting, digital marketing, AI-assisted services, and automation. You don't need talent. You need consistency. Here's how to do it. First, choose one skill. Not 5. 1. Second, buy one quality learning resource. Avoid overpriced promises. Third, practice daily for at least 30 days. Fourth, monetize quickly, even small wins matter. This option is best for low-income beginners, young investors, and anyone serious about long-term growth. Smart beginners don't choose just one option. They combine them. For example, $50 into an index fund, $30 into dividends, and $20 into skills. This creates stability, income, and growth. As income rises, investments scale. $100 isn't small. Doing nothing is. The real risk in 2026 is not starting. Every year you delay costs more than any beginner mistake. If this video helped you understand how to invest $100 in 2026, like this video, so more beginners can see it, comment below which option you would start with, and subscribe for simple step-by-step investing guides. Start small. Stay consistent. Let time do the work.